How's it going, everyone? My name's Jake. I'm with Trade Confident, and today I'm going to be talking about the interest rate hike that just happened. I'm going to be going into how much the hike was, what it means for you as a consumer and an investor, and how the markets are currently reacting to it. So stay tuned for that. Let's get right into it. The Feds have officially increased the rate by 75 basis points, bringing us to a total of 150 points increased over the past few months. This brings the interest rate itself to between 2.25 and 2.50%. Chairman Jerome Powell has said that another similar sized interest rate hike could be appropriate in September, depending on the economic climate around that time. The main concern of most people at this point is that continued increased interest rate hikes are going to result in fewer business loans being taken out, meaning that businesses are not going to be trying to grow, rather trying to sustain and survive during this economic climate. If businesses aren't trying to grow, that's going to likely reduce gross domestic product. And if the report shows negative tomorrow, that will be officially a recession. And if it doesn't happen this quarter, then we could be seeing it in the future if these interest rate hikes continue. Jerome Powell does not feel that a recession is likely, and despite having a possible negative report coming out tomorrow, stay tuned for a video about that, by the way. He said it's likely that a recession is not in play because of how strong the labor market is. But again, if the GDP report comes out negative tomorrow for a second quarter in a row, that is officially a recession. Let's take a look at how the market itself is reacting right now compared to how it reacted on previous rate hikes. Right now I'm looking at Bitcoin USD on the 1-day time frame. Each of these yellow lines are going to represent previous rate hikes, with the last one being today, July 27th. The first one happened on the 16th of March, the second was the 4th of May, and the third one was on the 15th of June. An interesting pattern that I wanted to point out here is that before each of these rate hikes, there was a sharp drop followed by a green candle on the day of the report itself. This is likely because whales and other large institutional investors are selling off in anticipation of the meeting in order to buy in lower as soon as the meeting happens. And as they buy in, it reports a large green candle because the price pumps as they buy in. But following that, there is typically a very sharp decline where they're selling off and likely buying in lower again. We can see it happened here. There was a sharp decline followed by a green candle followed by another sharp decline. Here, decline, green candle, and the next few days we'll likely see a decline as well. Even aside from the GDP report coming out tomorrow, that will very likely affect what happens in the market. The notable exception to this is March 16th, the very first interest rate hike. While there was a dump beforehand, the green candle did result in general market moves up, although this was also before the major drop in April. Since then, this pattern has played out twice, and it is likely to happen again, especially if the GDP report is negative tomorrow. Something to keep in mind is that historical data does not guarantee future results, so just because it has happened before does not mean it will happen again. Tomorrow, I will be coming out with a video going over the GDP report about the recession if it does happen, and if it doesn't happen, either way, I'm going to be telling you what you should be expecting. Since the opening of this candle, we have seen a price increase of about 7% here. This is a major increase and honestly a really big pump for only being a couple of hours. We've increased by about 7%, so you long traders are doing great. At this point, though, we are hitting up against a very strong descending trend line that we have respected since all the way back in April. I don't expect us to break out here. Like I said before, it is very likely we will see a drop in the market, although tomorrow will tell us for sure. If the GDP report is negative, we're likely going to see a big move down, possibly to the first support level at $19,240 right around here. That is best case scenario if the market does drop. If you enjoyed this video or if it was helpful at all, please leave a like. It really helps support our channel. And if you want to get more updates like this, please subscribe. We provide daily crypto content analysis and education for you guys so you can stay up to date on all of your trades and the economy as we go along. Trade safe, trade confident, and I will see you tomorrow to talk about the GDP report.